The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. My pleasure to be here. 11 o'clock till noon each market day. And I just did Tom and Tommy's show earlier on, the Money Masters show. And they're away. They're at a convention. So it was a pleasure to be sitting in. I just wanted to announce something that just mentioned something. Jules Eskin dies at 85, was lead cellist for the BSO, the Boston Symphony Orchestra, for 52 years. Now, we're not talking about, that is the equivalent of being the head of IBM for 52 years. This is one of the major orchestras in the world. This is one of the great cello sections of the world. And he was the boss. He was the kingpin. He was the lead. Until, this is incredible, in the Musicians Union paper, Musicians Association paper, just fairly recently, it was announced that they'd be having auditions for principal cello. So he was the principal cello playing. He I didn't see him this year, of course, but last year in the Boston Symphony Chamber Series, where they play chamber works, just the principal players of the Boston Symphony with a guest artist or two every now and again. That is at the highest level in the world. It doesn't matter whether this was a group playing at Jordan Hall here in Boston at the New Conservatory of Music, Symphony Hall, or Vienna or Sydney, Australia. This is at that highest level. And he was playing at that level right up until the end. You know, there's one other musician that I know of, Stanley Drucker, who was the principal clarinetist of the New York Philharmonic, and it just shocked me. I kept saying to myself, wait, is this the same Stanley Drucker that Leonard Bernstein wrote his when they were at Harvard together or something like that back here in the Boston area? He wrote his clarinet sonata for him? How could that be? That was like in the 50s or something like that. I could never figure it out until I realized that Stanley Drucker, the principal clarinet, was still playing right there. I mean, principal position is the soloist position. And to keep that standard up, unbelievable. And Jules Eskin kept up that standard right up. I can't believe 84 years old. When he died at 85, and he was 84 when he was playing, still playing principal cello. Now, on the other hand, this also says that there has not been a vacancy in that position for 40 whatever years that he's been principal cello. And that's the first time. In all the time that I've been here, there have only been 3 principal clarinetists in the Boston Symphony Orchestra. Tough gig, and when you get it, you have to keep that standard up for a long time. So bravo, and we're going to miss you, Jules Eskin. Just an just a fantastic cellist and a fantastic chamber musician as well as an orchestra player. So that's my little coda to Jules Eskin. Now, let's just get back to the market here. Dow's down 6 at 18,861. S&P is up 5.5 at 2182. Composite is up 17 at 5,311. VIX is down to the 1330 area. Today at noon, you're going to hear Kevin. I was speaking to Kevin just a short while ago, and he's going to be doing, and the options shows the TD Think or Swim show on options at noon. He's going to be discussing, Vega is going to be discussing the VIX index and what you might be thinking of over a period of time when the VIX is at this particular level. So Kevin Hinks right there. It should be a great show. Now, let me just get to this. In the E-mini that we're looking up, which is up 7, we've already gone to a leg B. For me, that confirms, based on the stochastic and the MACD, that there will be a leg C and a leg D to come. That's the way the Chapman wave methodology works. What is it? You find the most identifiable lowest bar, and you merely count each successively higher peak until you get to a D, and then other things can happen. Now, sometimes the move up is so quick, as it had been, that getting on board, you can miss it sometimes. Finally, we are along the Dow, and we're expecting higher prices to come. Now, in the 120-minute chart, I'd shown subscribers to my opening call right here that there was a rectangle formation unfolding. The round number 2185 double top that was made just the other day, back on the 16th, came back down to the 2168.75 area, and I was anticipating that it will be a leg C and even a D. I'm putting a plus sign here. No, I should put the up arrow. I can't really. The stochastic's not good enough. Well, I'm going to do it anyway. I'm expecting at least a D to come. All right, let's just put that right in there. So we're in a buy mode in the 120-minute chart, and there should be a test. I suspect there's going to be a test of the 2183s, and then 2185 will be next. If it goes to 2185.25, because it trades in 25-cent increments, you have got a confirmed, I'm going to call it a confirmed, and I know that I'm putting myself on the line. Leg A in the weekly, which suggests that you should still go then to a B and a C and a D in the weekly charts, taking us into the end of the year. Boy. Well, I did it. Put myself on the spot. Let's go on. You've got the QQQ series. QQQ trading up 35 cents at 117.26. It was acting very poorly because of Amazon, Google, and some of those the very big Nasdaq stocks. But in fact, we're in a rectangle formation. We might find that there's an inside buy mode that occurs in the weekly chart, and this is going to be A, and you do go to a B, a C, and it goes close to 119.66 or just above, and then you get a much deeper pullback. We'll see what happens. Then we get out of this is leg D in the 120 QQQ chart. Nice action so far. The monthly really looks terrific in the QQQs. So the Dow monthly chart, leg D. Remember, what is the D? We always talk about those Ds. Talk about the Ds. We'll go to the dollar in a short while, talk about the D again. We're only in B in the QQQs. If it goes above 119.66 in November, that'll extend leg B. If it doesn't, if it goes in January, that'll be leg C. So I'm looking at this, and I'm anticipating that in 2017, we start to get monthly tops, and then we're going to have to make decisions about, is this a Reagan-type era? I don't know about that. With Trump in the market, starting a brand new major bull market at this level without a big correction, geez, that's tough to anticipate because we did not get the three Democrats in a row that represented the same as the 1929 three Republicans, handing it over to Hoover for the final top. But what is interesting is that we've got you've got the president and the two houses with the same party. And that represents a lot of what happened in 1929. So I'm looking at this as somewhat parallel. Let's just go to gold right now. Gold, in fact, was up 1. Let's see where it is now. It's up 5. It's in a little trading band, but it's really the dollar that I'm going to talk about as soon as we return. The dollar is at 100.49, and it made a new recovery high for leg D in the Chapman wave monthly chart, and we'll be talking about that when I return.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Yeah, let me just say thank you, Dusty, and everyone else that was talking about dry ships and crazy action that happened there. Thank you for all that information. Maybe I'll get to it in a moment. But so a couple of things I wanted to talk about. We were just looking at the dollar, and the dollar has gone to a leg D in a pattern that we identified a long time ago. It's just this double cup formation. And basically, I could have done this, and it starts to make it a little complicated in discussing it. You know what it looks like? Back in the turn of the 1900s, so the 20th century, those pince-nez, or whatever they call them, those glasses, they used to have those glasses that had a little handle, and you would hold them to your nose. We don't remember that. It was way before our time. But it looks like that. All right? And that's the inversion of the pattern that I was talking about earlier on, which is this, the H pattern, the lowercase h that goes to a lowercase m, and that is the formation that I always talk about in terms of looking at lower lows and lower highs. That's what you can expect. And then at a certain point, you'll get a rather large H pattern, or you get a series of consecutive H formations that test the low and eventually break the low. What happens after that is really important. Well, this is the inversion. This is upside down. And there it is. We've gone to leg D. And now we're at 100.52. I mean, I like this action. I think this is leg A. I think this is the start of a move in the daily. And then that's going to have repercussions for the weekly chart. Still a single leg, still a leg E to the upside, and a leg D in the monthly. So my thinking here is that we could go to the 101.50, maybe 102.50 area. We'll see. Then it goes step by step. So far, I have no signal to say short the dollar, which is a question I'd had. Okay, so that's that. Now, I had another question about Walmart. Did I finish all the rest? No, I didn't. I must finish all the rest. The TLT, trading down at $1.09 at 121.92. It is below the 200 period. This is the iShares 20-year Treasury bond fund, and it is below the 200 period exponential moving average in the weekly of 122.40s. And I'm going to suggest to you that yields at this particular time are going to hold a little bit longer. I'm just thinking, unless Trump says, yeah, go ahead and do it, I'm not sure that any Fed chairman right now is going to say, I'm going to exit, and I'm going to exit stage right, and I'm going to move to raise rates right now. They might just say, we'll wait until January or February. But if that's the case, the market is already priced in that there could be there's some better economic news, etc. Housing starts, I think, were much better. So there could be a rally, and this is the big trend line that we've got to watch in the TYX, the 30-year Treasury bond yield, which is at 29.4, 2.96 at this particular point. That it could trade now between just over 30.30. If it really takes out this month, if it takes out 31, if it goes to 32 this month, that is saying that's it. Forget Japanization of our bond yields. Now we're going to start to see some inflation. And then I've got to start looking at gold a little differently. And that would also coincide with maybe the monthly chart of the daily, then the weekly, and then the monthly chart of the dollar having some kind of a timeout after such a big move. Okay, so I want to put that into perspective. We'll go to oil, crude. I did that just now when I did Tom's show. Crude oil is 46.48, up 0.38. It was much higher earlier on. I'm thinking that crude oil is having a nice bounce, but I'd said before that I think that it's trapped between the 40, maybe 48.40s, somewhere around there as a high. But at the same time, 44s could in fact be a low. It could be bonds, gold, and anything that dollar, VIXY, bondy, and goldy, they could all at this point, the dollar's move could have been the bulk of the move could have been made, and now we're going to just chop around sideways, and we're going to see whether what sectors still have the strength, and that's going to be very important. Which is the reason why the 500 S&P stocks are up almost 7, and the Dow's unchanged, because the bank stocks, 5 of them, financials, not banks but financials, really need a rest. They just had a huge move to the upside. Okay, go to George in New York. George, how are you?
Basil, good morning. How are you today?
I'm very well, thank you.
This weather is unbelievable for November.
I'm not complaining one iota. I love it. Next week's going to get cold, but boy, what a bonus we've had going all the way into November.
So true.
Fantastic.
So true. Question. Today, I wanted to look at the Dow, but just on a broader scope.
Yes.
One, I'd like to know what your thoughts are on longer term, weekly, monthly on the Dow. But here's what I want to more or less ask you. Did you ever see in all your years of experience where you could get a reset on the market, meaning meaning that we could go into a new growth stage? Because what's baffling me now is I see the Russell 2000 has reached new highs. And usually when we come out of a recession, if I'm correct, we usually start with small caps and then we go to financials. And that's the two areas that started to go up very fast after the election.
Okay, so I was kind of dealing with that a little earlier on, and actually when I was doing Tom and Tommy's show earlier on, the Money Masters show, I did get into that. But let me just recap. 3 things. Mm-hmm. One is, the answer is, and I've had to ponder this a lot, and I'm starting to, sometimes I just like to let things sit there at the back of my mind and just let it put it on slow cooking, and it just sits there. And at some point, the idea, I don't go looking for the ideas. I want the ideas just to jump out at me, just like all my technical indicators. I never looked for an instant restart. I never looked for a Chapman wave peak D. All these things just appeared after years and years of working at them and working at them. So I'm beginning to get a little bit of clarity, and I think that the clarity essentially says to me, number one, the Dow has already gone to leg D, which makes it a little bit mature in the big cycle, but that's not to say that it has to stop. It's just that it's got to the 4th leg already. The S&P hasn't even gone to leg C in the monthly, but the QQQs are in leg B. They could even continue leg B if there's a new recovery high in November. But what's really important is I was pointing out to both my subscribers and to, I mentioned it on the show, the IWC, which is the microcaps, That is doing absolutely fantastically. What a move. It's gone from the 70 area to 82. And I think that that's telling us a story that within the context of this market, the rotation has not interfered at all with the longer term aspect of, and it's exactly what you were talking about, because over the weekend I said, why are the micro caps moving here? And the reason I think is that they don't have a dollar component, most of them. They have all the other intrinsic things that you really want to look for. Hey, can you hold on? It's a good subject, and we can go into it in greater detail. We've got Georgia, New York, talking about the Dow, talking about the markets, talking about could this be a reset? Just a great word, a reset. And I'll talk about it. This is different to when the Dow fell 50%, and then you've got
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So we've got George from New York on the phone. We're talking about the Dow. We're actually really talking about the markets per se. And the real question is, could there be a reset? And basically what George is implying, and what I've been thinking about, I'm sure a lot of people are thinking about, without a 22% correction, as we had back, was in April, May of 2010, and all the rest have been just single digits or maybe 11%. Without that kind of a correction, when I remember getting my buy signal, major buy signal, back in July of 1982, based on work I was doing at the time. But the market already, the S&P had already fallen 50%. So that there's a big difference. So, and now we've had a 6.5-year bull market. Are we really talking about a recycle without a correction? So this is what I'm thinking. I think that this move now is going to continue just a while longer, and that we've got a very sharp pullback coming when reality sets in, and that reality could take us into a sell-off rather than what people think that there'll be a spectacular December going into the end of the year. I'm thinking before December we might have a correction, not like late December into January, but some kind of a correction. I'm not even talking percentage just yet because it could be rotational. But I would not be surprised to see the bank stocks give back at least 35 to 50% of their most recent gains. And now when I'm looking at the IWC, which is the microcaps, because they are being impacted positively right now, they don't have the dollar influence, but they also have a kind of a domestic agenda, which is good. They don't have the implications that multinationals have. It says to me that if the IWC is able to break 84.28 for a new all-time high, that would be a confirmation that you're going from the smallest to, I think the Dow at this particular point has had the biggest move and it probably needs a bit of a rest, and that the S&P, the SPX needs, in my work, it's starting leg B, it needs to break into the 2193.82 so that it starts leg C. The moment it gets to C, it could start a pullback. I don't mind that at all. But most importantly, I don't think we can have a reset without some sudden it comes out of the blue, kind of reality just hits us right on the noggin, and I see a pullback. If it's rotational, it doesn't have to be more than 12 to 15%, but if it is a very broad pullback that says, this is an issue right now, and it's such a major issue, maybe it's yields, maybe it's not, I'm not sure, then I would love to see a pullback that takes us down 18%, and then I think we can talk about a restart and a reset, but it doesn't mean to say that you're resetting for a major bull market. This, to me, is still part of the coda phase. This is, I said the coda phase we might find is in 2 or even 3 parts, and I think that we're in the middle of the coda phase, maybe even in the 2/3 part with 1/3 to go. That could take us into 2017. In other words, I don't think I'm looking at this as the start of a major bull market that takes the Dow into the 25,000s. I think there's a reasonable expectation that we're going to the 19s, the low 20s, and it's going to mean that any correction is very short-lived. You can't have time anymore. We can't have 3 to 6 months. It's like a 6-week like we had in January of this year. It's got to be severe. It's got to scare the day out to everyone. It's got to make the stocks that were looking great look terrible, at least short term. And then I think we can get a reset. But that reset is not, that's a reset for the coda phase. I'm really convinced about this, that it is where at that point you can actually go fully invested, or you can start the process of if you have been fully invested, that's when you can start taking a little bit off. Every month you can take a little bit off. That's the way I would look at it. The 2 ways of looking at it. Either you go fully invested because the market's going to go to all-time highs and you want to have everything there, and then there's a certain point you're going to say, okay, now I have to start taking off. So it's a very complex thing. I'm going to make it
let me ask you another question, because the reason for the question today by calling in was, it's really throwing me off because based on my calculations, we're extremely toppy, if I'm calculating correct. Because for the Dow, I'll be honest with you, I had the Dow at a topping stage of 18,975, and we hit 18,934.
Right.
So that's what's making me nervous.
But Giorgio, can I ask you, is that based on PE, or is that what was that based?
No, that's based on a Fibonacci retracement from the 09 bottom. So I brought it up to 1.618, and it gave me an 18,975.
Okay, fine.
On a monthly.
Okay, and I have, this is, I mentioned this. I can't remember now. I sent out so many charts. I don't remember if I sent this to subscribers, but I was
tracking it all along since 09, So
you know what?
we had an 11,000 breakout on the Dow.
So this is a chart that I was wanting to send out, and I think I did all my work, and then I think I forgot to send it out, or I was waiting for something. Let me just show you right here, waiting for data. That's not good. Am I going to not get my data? I wanted to show this chart. There it is. So let me get rid of this in my 8 data 1, data 2, data 3. Close. Let me get rid of this one. So I hope I'm getting rid of the right one. Close. There it is. So here's my chart. Oh, in fact, I forgot to say, maybe I sent it out yesterday. I can't remember. So this is my chart that shows the New York Stock Exchange, and I've got this the expression because every time it did this one particular pattern, not every time, but twice, it failed miserably. But we did not do that, and that was that little right shoulder failure where I got a vertical. This is a New York Stock Exchange back in 2000, in September, when it went to 71.64. It pulled back, and then the MACD and stochastic were dropping sharply, and then it had one spike to what I call a peak A minus right here, and that was back in. That was May of 2001. Then it had a spectacular run from the low of 2002, went to 10,387 October 2007, pulled back, and it had a sharp move up as the technicals were failing, and an A minus again in May of 2008. And then I said, I did a webinar, in fact, on this, and I said, I don't think this is the same. The move in November after the top of 11,251 in peak D, the third time, this is different. And I said, no, I think this is very different. I think that we're going to have a bit of a rally. And then the last webinar I did, which was just about there, showed that there is a difference. And now I've got the New York Stock Exchange, the very broad 2000 New York Stock Exchange, at a peak D under the previous high. So it's what I call a gray B, because it's under the major chart. But the technicals are really improving. And it says to me that if the New York Stock Exchange going into December is able to go above 10,904, I would say that's leg C, and that's a really good chance that it will go in 2017 to new recovery highs. So that says to me, looking out, I don't know about a reset, but I do say that there's been a recycle into different sectors. And because of that, and that we've seen that since the low of March of 2009, where we came off the low, the summer of 2010, I identified that there was a rotational aspect to this of correcting without breaking down, as poor sections became strong sections, at least for that period while it was rotating through the different things. So I hope that helps you. We'll talk more about it.
Absolutely. Thank you, Basil, as always.
Thank you, George. We'll be right. You too. We'll be right back. Hours of 5.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, so a lot of questions, a lot of statements and stuff in the 10. Let's just go. Good questions. What about natural gas? Well, NG, natural gas at 2.72, down 0.038, down 1.37%. It looks to me like it's attempting. Let me just move this out so you can see something that's very important here. Well, the letters, what a pity. I'll have to go to UNG. The letters, this gets smoothed out every month. That's why the letter's in the wrong place. You'll see it in UNG. There you are. Peak F top, and this is what I wanted to show you. Within the context of left side, right side price time match, we've made lower lows and lower highs, but it's not the low that was made back on the 19th of May at 6.36. We've gone from 6.36 to the peak D top at 8.87. Then we had a left side, right side price time match with another new signal, a buy signal from the 11th of August at 7.55. And it ran all the way to a peak D, another peak D. And then that was a down arrow. Now, this is a very interesting thing. Nobody ever asked me about this except when I do my special series. What is this E and F? And then you put a little inverted V-shaped pattern there, the little cappy. Well, sometimes everything about it says that is a sell signal to sell mode. But then there's this rogue wave type move to the upside that just kind of completes the move, and you usually get just 2 peaks, and it's usually E/A or E/B and F/B. It could even be a G, but it's not a complete move, and the stochastic bounces over 80% and then under it, and then you get this major move. Now, because this has been a very serious move to the downside, and winter's coming, there's no question that we will need natural gas. It's just how much is out there. My thinking here is that we might know within 3 days. Today's Thursday. By Monday, we should know. By Monday this time, we should know why. Because if natural gas is gone above the 7.55 high of the 15th, that's going to say you've now got a cup formation. And that's very important because it will signal it could go towards the $8.20 level, moving average resistance. But if, in fact, it pulls back for 2 days or 3 days and it cannot get out of its own way, and it hits this little doji candle of the 11th, and the close was 706, the low is 699. If it even touches that middle point, that is the 706 level, that's just saying it's making an H formation. You're going to have to wait till maybe the middle of next week, Thanksgiving week, before you get a real sign that natural gas is. It seems like from the technicals, it's getting ready. I'm going to be putting it on my list for my subscribers. UNG, it seems to be getting ready for a move. But sometimes it can disappoint before it really gets going. And when it gets going so quickly. Sometimes you even have to sit out a pullback in UNG, natural gas, United States natural gas, before it actually kicks in and really takes off. So that's going to be on my list. So let me just give a couple of things that I'm looking at here. within the shorter term, let me just make it real clear. I believe we're in a bull mode and that the Dow will go to 18,935 for leg C, and then it'll go to D. But the S&P has only just today, I believe it is, today gone to a leg B, and that is very important. Why? Because I wanted it to be able to get there. It took a little time to do it, and it's done it very nice and strongly with the MACD and stochastic. Stochastic's at 97. I would not be shorting anything that's at 97% unless it's been there for a long time. So to me, this is very positive, and I suspect that this will break out and that I will have to call this E/A with a real good chance that it's actually new leg A in the weekly chart. And that would suggest we do not take out the low of 2083.79 in the S&P, not for a while. So this is going to take us, this takes us now, so at the very, I haven't got a calendar in front of me. This would take us into the end of December. Oh, maybe that works out that, in fact, we do get a January pullback. I'm not sure. I don't want to even talk about pullback just yet, other than to say I need leg C in the monthly chart of the S&P to be able to say we are going into 2017 with higher prices. Just make it as simple as possible. Now, the other thing is, within the QQQ series, this is a nice move to the upside, up 50 cents. Because the Amazons, I've been grumbling about Amazon having made a pretty serious peak F and a Chapman wave, a peak. Let me just show you. Let me move that away here. This is a Chapman wave 5 and a peak F in the daily at 47.21. It's hit the 200-period moving average support in the daily. This is where you can expect some kind of a bounce. This has to be more than a bounce, though, if we can have a good season, a buying season coming up here. But it's a 5 in the weekly. Not in the monthly. Monthly is F, maybe F/B. All I'm saying is Amazon needs to be one of the leaders. Google, I always go to Google. I don't care about this alphabet. Google, same thing. Hit the 200-period moving average, a nice move to the upside. What have we got? Facebook, FB. Facebook, under the 200-period, it's really struggling. I think Facebook is in the later stages. It's going to need more time. It's not participating now. I've been saying I want Facebook lower down, and then it'll be a buy for the longer term. And I called it a grandkids college fund buy. If it lasts that long, I don't know. But anyway, and look at the IYT. That's the peak D in the daily. MACD is strong. Stochastic's 92%. Leg D in the weekly. Leg B in the monthly. So far, this is really good action in the transports. But wait a minute. What about the airlines, XAL? The XAL is in leg D and holding very nicely, and it'll actually be a recycle if it can go higher. But at this point, what I'm suggesting is that transports, airlines, banks, let me go back to the BKX index. That's the Keith Brewitt Bank Index, holding very nicely, in fact, at 85.42. I'm going to be watching this very closely. I would love a big sharp pullback in these guys because this is what you want to be looking at for the next big move up. But at this point, all I can say is nice action in the XLF. Let me go to the XLF. Less history. Oh, good action. It's up 30 cents at 22.16. And that's the way I have to be looking at it, that I haven't got any sell signals, and even if I had a sell signal, it would only be a short-term sell signal. This is not the area to be shorting in this particular environment. So that's very positive. Now, there was something I'd been asked about the XLU. I can't remember if it was this hour or last hour. XLU, this is the S&P Select Utility Spider Fund. I just think it's got a chance to make an arch formation. It's at 46.53, up 11 cents. Yeah, we could pop to the 47s. Or maybe even touch 48, but I think it's going to come back and do a retesting. And that puts me into the category here. Let me just show you this. I'm going to grab it in a second. There we go. So this is my long-term charts. We're going to look at the bond yields, my triple yield weekly. And here we go. This is the white is the 30-year T-bond yield. The brown is the 10-year T-note yield. And the cyan light blue is the 5-year. Now, I'm calling it just for now to be safe. I should give it an alternate wave count because I've never had. I had a question the other day. Have you ever seen an instant restart in your weekly chart of the yields? In other words, can this recycle? Is this now not F, but a B, F/B? is at F/B in the 10 and the 5 year, which says you could still go to a C, a D, and even an E. Well, I've never seen it. So if it's going to be that case, wow, that's all I can say. But we've been here before in all the yields. There's nothing unusual. It's just the speed with which we've done it and the talk of the Fed that is making it important. I'll be back straight after these messages. Basil Chapman, Target Admissions out.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So for the 10-minute E-mini chart, I used to show that. I think I might have forgotten it. There's been so many charts today. This is leg B. And 2185 is the round number high that has been hit twice. If it goes 2185.25, that is really important for the futures, and I'll tell you why. Because the E-mini right now, ES, look at this, in leg B in the daily, but that's not the issue. It is the monthly chart. 2185 is the high. If it goes to 2185.25, that starts leg C. We're within an eye blink away in the monthly chart of doing that. And what that does is it confirms this becomes a blue E/A in the weekly chart. And that's going to be really important because my bias right now is to think of it as an E. And that would mean that, let's say all of next week is down. That makes a peak E. Let's just say we do go to the new high. So it's E/A. Then the following week, first week is at the start of December, you go to a leg B, and then you pull back. And then the third week, you go to a C, and you pull back. So that takes you to January based on this methodology. So it does allow for a very sharp decline in between, but not one that would be, 12%. Yeah, it would give back all the gains. And I don't even want to talk about it. I'll do my homework this week, and by the weekend I'll be clear. As it stands right now, we're in a buy mode, and I'm just staying there. Buy mode in all the time frames, the daily, the weekly, and the monthly, in the Dow, the S&P, the Qs, the New York Stock Exchange, because it pulled back and it's really kind of lagging. I'm just going to say that NYA.X, that the monthly chart, yeah, it's in a buy mode, but until it can break above 10,904, I'm just going to leave that out. But you can't have the 2,000 stocks of the New York Stock Exchange lagging. So my suspicion is it will catch up at some point. It should be leading, but it's not. All right. And if you go to the IWM really strong. What a breakout this has been in the weekly chart. That is, I'm calling that an F for now, but it's really F/A. It looks like and has the characteristic of it. Look at that monthly. That is just a powerful leg beat to the upside. So I'm just being as conservative as I can, saying my daily and weekly charts are extremely strong. The Dow, the S&P, and the Qs are very strong in the monthly charts, and that's all I can do. More than that, I don't want to. It's silly to go out on a limb. So a couple of quick questions. I've already gone through the XLF, the BKX index. Yes, Goldman Sachs is acting really well. It looks like it wants to test 218.77, the all-time high. I think that was the all-time high. Yeah, no, the all-time high is 250.70 back in 2007. Whoa, that's got a long way to go, huh? It's acting very, very well. No question about it. Next question was Goldman, JP Morgan. I just did that. Oh, Walmart. I don't think I did Walmart in the end. I did it during a break. See, Walmart made a peak E, and now it's pulling back. So let me just do this quickly, folks. You see this, the D, you see the down arrows, you see the up arrows. I'm going to be discussing all of this when I do my webinar. And let me just go there real quickly. This is a webinar coming up December the 6th, Tuesday, 6 to 7:30, December the 20th, 6 to 7:30, and January the 10th, Tuesday, 6 to 7:30. Simple technical tools to analyze the charts. Yes, I will use the Chapman wave notation, but it's really to do with trend lines, arch formations, cup formations. What do you do? How do you get that left side, right side price time match? It's all those things that you see me do here live every day. So I'm going to be having, I've been asked so many questions about it, decided to have it, and it'll be somewhat cheaper for subscribers. I'm trying to make it the best I can. I'm really looking forward to it. It's going to be very comprehensive. Walmart made a peak E and it's pulling back. Paying a peak D in the weekly chart, pulling back. There's that arch formation, the lowercase h. Will it test the low? I think it will. Hey, folks, have a great day. Stay tuned. Think or Swim, terrific show coming up with Kevin Hinks about options and Vega looking out, and I'll be back tomorrow. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.